Hi everyone. So I'm back with my panelist. So we'll start with the first panel discussion for the day, that is Road to Recovery, Digital Banking and Beyond. So we have with us Arvind, Director of HNCO. We have Sudhir Pai. We have Sudhir Pai, the Principal Executive Officer of MAS. We have Sweta Tiwari, COO and co-founder of startup Reseau. We have Sudhir Pai, CTO of Financial Services of Capgemini. And we have Arvind Ronta, VP and Head of Products, India and Southeast Asia. So over to you, Sweta, who will be moderating this panel.
Thank you, Jagruti.
Yeah,
I
thanks.
think Arvind just left the stage. Okay, maybe we can start. Meanwhile, the team can check with Arvind. Good afternoon, everyone. Good afternoon, everyone. Welcome to the first edition of FinTech Startup Bridge, focused on ASEAN as a region. As we all are privy to the fact that after any crisis, digital has been a highway for the economic recovery. So today we are here and going to be discussing on how digital banking is going to play a key role for recovery from the onslaught caused by the pandemic. And since I have such a broad representation from the industry today with me, I'm sure it is going to be a very interesting and insightful session. So, very warm welcome to my co-panelist and a very quick brief introduction about my co-panelist. So, I have Pat Patel with me, who is the Principal Executive Officer at Monetary Authority of Singapore. Pat would be sharing a regulator's perspective in the financial industry, in the financial services industry. And Pat has also been a leader in establishing fintech thought leadership in the region and globally. So, welcome, Pat. Next, I have with me is Guillaume Rico. Guillaume is the director at Chappuis, Halder and Company. Guillaume, I hope I pronounced it correctly.
Very well.
Thank you. Guillaume brings in a very different perspective as he is the digital transformation expert from the extended Asia region and he works with large financial institutions. Next, I have with me is Sudhir Pai, who is the Global Chief Technology and Innovation Officer at Capgemini. At Capgemini, they offer IT services and are a global system integrator working with large financial institutions. And on the other hand, they work with fintechs and again focused on the region as well as globally. And my fourth panelist, Arvind Ronta, we don't have him back yet. Arvind is the Vice President and Head of Products for India and Southeast Asia at Visa. He again would be bringing in a very different perspective, as we all know that Visa is, so to say, the first fintech globally, and I think about 60 years old now. He would be sharing their perspective on the evolution over the years that he has been experiencing, or Visa as a brand has been experiencing. So with this, I am sure we are going to be having a great diverse discussion with this diverse group of panelists. Over to you, my co-panelist, and I would request each one of you to give a very quick overview on the region that you focus and what you're doing currently in your role. So maybe we can start with Guillaume, you first.
Sure. Thanks a lot. Thanks, Sweta, for the introduction. So basically, I lead the augmented consulting practice for CH&Co. We're a boutique consulting firm working solely for financial institutions. So to give you examples of what we do, so we have worked with some digital banks and neobanks to develop their core offers and platforms in Europe since 2015, actually, and now in Asia. We lead some large-scale innovative programs. For instance, we have led the design thinking and the design of the CBDC with the Hong Kong MA and the Bank of Thailand. And we're working on the definition of a cross-border platform for payments with them. So that's just an example of projects that we're leading.
Okay, interesting. Over to you, Pat.
Sure.
I'm just going in the order I see the screen.
And that's fine. Thank you, Sweta. And thanks for the team for inviting me to be along here. So I joined MAS about a year ago. So for those that don't know MAS, it's the Monetary Authority of Singapore. I joined to set up a new office within the FinTech group. And so that is the International FinTech Office. And so we do a number of things in my team. So one is to look at identity. So we're working with a couple of countries across Africa and 2 across Southeast Asia to really look at how we can build and look at foundational digital infrastructures. So that's one area. The second area is how do we build the FinTech VC community in Singapore? So Singapore has done very well in recent years. About 5 years ago, we had about 100 startups, FinTech startups, and today we have over 1,000. And so for such a small country, it's grown very, very quickly. And last year and this year, we're looking to surpass that. We raised, I think it was about $1 billion in FinTech funding for our startups. So that's a good kind of milestone for Singapore. And then the last thing I'm leading on at the moment is the Singapore FinTech Festival. So that's the largest gathering of the FinTech community in the world. And so we're hosting that this year in December the 7th to the 11th. Thank you.
Thank you, Pat. That was quite informative. Over to you, Sudhir.
Hello, everyone, and thank you, Sweta, and my co-panelists. It's a great opportunity to join this session today. So my role in Capgemini is, put it simply, it's everything to do with new and next when it comes to technology, innovation, and ventures. So the interest is all around financial services, and right now the focus is pretty much started with the topic that we are going to debate today about resilience and what does it mean to enterprise. So I focus primarily around enterprise and collaboration of enterprise with fintechs and startups. And given my sort of residency here in Australia, in Melbourne, and proximity to Asia, I've spent a fair bit of time in ASEAN and Asian country, and but look forward to the Singapore FinTech Festival as well soon. Thank you.
Thank you, Sudhir. I don't think Arvind has joined yet. Maybe we can start with our first question, and meanwhile he can join. So my first question is direct. Jagrati, any luck on Arvind, or should we just start?
So some technical error is there. We are fixing it, and he'll be here in next maybe few minutes. Okay,
Sure.
until then we can start.
Yeah. Sure. Thanks, Jagrati. So my first question is to all three of you, and this is understanding what has happened over the past 6 to 7 months since the time the pandemic has started. So what has been the impact of COVID-19 on financial services as a sector? And in your experience, and again I say in your experience, and directing this to all three of you, because you all three of you have been working with different stakeholders and bring a very diverse experience. So in your experience, how has things changed over the past 6 to 7 months in the sector? Maybe again we can start with you, Guillaume.
All right. It's a very, very large question. I'll probably take a focus. What we have really seen over the past few months is that banks have jumped 10 years in terms of the ability to adapt, the digitization of processes. It's incredible, in fact, within the financial services sphere, how the mindset have changed. That is within the organization, but it has a very strong impact as how banks are now considering serving their customers. And the type of discussions that we have now with some financial institutions are literally, again, 10 years, a step of 10 years, a leap of 10 years in terms of discussions. How we're going to tackle the new needs from, especially, and we'll come back to it, businesses, how we're going to supply the recovery of the economy, how are we going to serve internally our staff who have new needs now to work from home, etc. So I believe that the good part of the terrible pandemic we're living is really a change of mindset.
Thank you. Pat, over to you.
Sure. So I think in some ways the question probably is easier to answer what hasn't changed, because it feels like everything, certainly from the regulator's perspective, but certainly from our communities as well. So if you, just to build on what Guillaume was saying, you've got the back end infrastructure, and that has had to adapt. So whether that's to adapt to employees to work from home, which has introduced new risks as well. And obviously cyber has been a big issue at the moment. So you've kind of seen that in large parts of the world. But even to be able to use that back-end infrastructure to be able to serve customers, I think that's had to evolve quite quickly as well. And then the front end, so how do you reach your customers? So whether that is large banks or even some of the smaller banks, that's been a massive challenge. And I think, you know, everyone talks about acceleration, everyone talks about digitization. It's not easy to move with the time that's required. And so there's had to be trade-offs, and I think some organizations are looking at that. I think we'll see off the back of the last 6-7 months, you know, some changes in how organizations would view their expense, so their bottom line. And so whereas in the past you'd seen kind of less collaboration in certain parts of the world, but that seems to be accelerating a little bit more because it reduces the cost base. So that's a couple of things we're seeing. The other bit is the cross-border business activity. And so during lockdown and clearly even today, it's reduced massively. And so that's one thing that there isn't a government around the world that isn't thinking about. How do we get that cross-border business activity going again? One thing we have seen is a lot of corporates, so the large kind of financial institutions, for want of a better phrase, but going shopping. So you've started to see a lot of deals happening, much more so than the previous years. And so you're seeing that kind of happen across the world. One thing I would say that fintech has kind of bounced back. There was a blip at the middle of the year, but we're seeing a lot more funding coming to fintechs. Certainly, you know, the US is a great example, parts of Europe and even in Singapore as well. So we had a little bit of a blip here, but then it's kind of picked up again. And so, you know, when you speak to any VC or fintech VC around, they will tell you that fintech is their crown jewel at the moment. That's the businesses that they're doubling down on, because if you look at multiple industries and did an analysis of that, you would see there were a lot of industries that were suffering in a big way, whereas fintech seems to have been quite robust. And when we say fintech, we're talking more, from my perspective, around the B2B fintech segment, where we're seeing kind of a bit more growth happening. Yeah.
And that's the same has been even in our experience. Fintech or BFSI as a sector has always seen or has always come forward the first, be it post-pandemic, pre-pandemic. We have seen this sector always coming forward, giving support to the new startups or the fintechs as well in adopting technology and digital solutions.
But I think one of the things we've definitely noticed is that if you think most of the fintech founders, this is the first time they've experienced any downturn. You know, they weren't running businesses back in 2008. They weren't running businesses in early 2000s. And so what we found at the beginning of this crisis is that a lot of founders didn't know where to turn, and they weren't used to having to work from home specifically and not be around their teams. And so I think that whole kind of psychology of a founder, I think there's a lot that have gone through this kind of cathartic process over the last 6-7 months. And from what we're seeing, they've come out stronger. And so I think that is another thing which hopefully a lot of founders can kind of wear this with a bit of kind of like a badge of honor that you've survived and got to this point right now. Clearly, there's going to be tough times ahead, but if you've managed to get through these last 6-7 months, then hopefully, fingers crossed, the future will continue for you as your business.
Yeah, I agree. Over to you, Sudhir.
Okay. No, I'm just building on Pat's comment. Sure. I guess there are two dimensions which I would like to highlight. Let's take an enterprise view, right? So I still remember January-ish, I was in Hong Kong, and then, you know, all these things started to. I can clearly see that it is first 2 to 3 months, and then next few months and next few months. It's sort of evolution around that for across the board. And the first 2-3 months was a little bit of workaround process, resilience, and I need to make sure. And some of the things, it's not so surprised that we have been talking about business continuity for ages within corporate world. And for the first time, corporates have realized that this is a BCPP, which is a BCP on a pandemic. That means tomorrow, it's not about from one location to the other location. On one fine day, 80% of your workforce cannot work, even remotely, if they're sick. Then, who are going to serve your customers? So I think the pandemic has raised some really so-called questions which were otherwise not even thought through. So that's sort of the first 2-3 months. And then I think the next big wave was there's so much pressure on enterprise from governments, right? So there's large amount of funds to be disbursed, support through call centers and things like that. So because financial services is backbone of economy, right? So you have to come out of your business and support the society, and that was a big role. And what we have seen is those who have not performed that well have lost a lot of customers into the newer firms and fintechs and so on. And then the third regime, which is pretty much about all these are nice, let's look at the future, and how will we operate type scenario. And if you look at that's the enterprise. If you look at the fintech world, there was a bit of a situation where fintechs were assuming there are more digital projects that I'm going to embark on with enterprises. Enterprises are assuming I'll have to wait and watch before I prioritize, and there is cost pressure. So it's a little bit of a vicious cycle there for some period of time before the actual engagement like rubber hits the ground per se.
Yeah. No, I completely agree. Arvind, just to fill you in, we just started with our first question, but it would be great if you could help us with a very quick introduction about yourself, and then you can just help us with the first question, which is in your experience, and because you work at both the ends, in your experience, what has been the impact of COVID-19 on financial services as a sector over the past 6 to 7 months that we've seen?
Excellent. So first of all, apologies for the internet issues. So real quick intro, I'm Arvind Ronta, and I lead our India, for Visa, I lead products and partnerships in India and South Asia. It's been an amazing market. As you know, it's growing by leaps and bounds, specifically to digital payments and banking overall. Specific to COVID and how it has changed in the post-COVID era, I think the broader digital trends are as follows, right? One, we've seen a huge spike in folks who are coming to e-com. And e-commerce is not just people, of course, a lot of people were forced to use e-commerce because the face-to-face was locked down. But there were also like a lot of our parents and a lot of older generation or new generation taking on bill payments, taking on some of the use cases which were previously done offline. They came online in a flip of a switch. And similarly on the merchant side, a lot of merchants were forced to come online to sell their inventories and so on. So that's trend one. Trend two is that now looking at in October, we are roughly around 70% in recovery mode from pre-COVID levels. And a lot of that recovery is led by e-com. We are actually doing much better in e-commerce from pre-COVID levels. Like I think we are seeing that we are at a much higher level in some of the categories in e-commerce versus others from January, which is a pre-COVID month. So a lot of that recovery is coming back in, and that's a positive trend. The other one, the third trend I would say is that how people are shopping and how people are in face-to-face, how people are taking on to touchless and contactless payments. That's a huge trend. We are seeing that the penetration of contactless payments, whether it's on QR or tap and pay, is taking a huge spike. And across markets, we have seen that, not just in India, where at least for Visa overall, we are seeing that number as high as up to 60% plus in some of the geographies in terms of transaction penetration is all contactless. And that a lot of that is driven by hygiene factor and so on and so forth. And then finally, I would say that access to credit. Of course, it's been one heck of a period where credit access has been a challenge, and with moratorium and a lot of these policies, the banks trying to be very diligent about extending credit. I think some of that is still on, but will veer off gradually. And I think a lot of the banks are looking at their underwriting policies and overall risk management policies. So hopefully, when we'll come out of it, as we are recovering, it'll be both in payments and access to credit would be both fine and healthy.
So just to follow up with that, Arvind, I have my next question to you. So how are fintechs playing a critical role to accelerate this transition to digital banking? And like you mentioned, merchants are now adopting much more than what they were earlier. So what is the role that you see fintechs are playing here? And how they are supporting the sector in the recovery more? And again, maybe we can also focus on SMEs a little bit more.
Excellent. So, we believe we are a fintech ourselves. Like we're a big fintech, and we've relied on partnerships. And honestly, even before COVID hit us, fintech's partnership and how they're already working with banks and the networks and the participants in the value chain was already happening. But I think it's accelerated even more because of COVID. And I would point to three trends in SME, specifically to your question. One is digitization of SMEs. If you are a Kirana store owner and you didn't have a website, you didn't have a way for getting paid for orders online, you didn't have any sales. Like the whole nation was in lockdown. So that's number one trend, digitization of SMEs. We saw a lot of fintechs, and they continue to do that, likes of Instamojo, they're a Visa partner. And their sole focus is helping a small business set up a website, a shopping cart page, get the payment option, the payment gateway set up, like basic plumbing which is needed to sell online. For some of these businesses which are not very web savvy in the first place, like a small Kirana store owner. So that's one, digitization of SMEs and how fintechs can help and are helping today. Number two is access to credit. A lot of these fintechs have enabled flows like which are promoting cash flow based lending versus a balance sheet based lending. And that's very important because a cash flow based lending, think of those as sachet loans, small value loans that banks would otherwise not be able to provision. But a fintech which can monitor the sale activity with a small business is able to work with an NBFC and offer a small value loan at a very affordable rates, which is both competitive for the small business owner as well as for the fintech provider. So the access to credit, and I think a lot of these guys, as we know, fintechs are actively participating with OCEN, as you know, right, Open Credit Enablement Network, and the work iSpurt has done a good job on that, on opening up the ecosystem. Visa is actively participating in it. So all of that and how fintechs can contribute to that will allow fintechs to distribute credit, help underwrite more people on that credit, and provision more credit to small business owners through open rails, for example. The last trend I would say is, there is corporate. I think the way to say that is corporatization of small businesses. And what I mean by that is, small business owners now have same access to online tools like cloud computing, expense management, monitoring their sales. I think a lot of these tools, which were previously the bastion of large corporates, these small businesses are now able to get it. And we see companies like Zaggles, companies like Open, enabling these tools, largely cloud-driven tools, to manage your taxes, GST filing, expense management of all sorts, to a very small business owner, and at a very affordable rates now. So I think this is a good trend, and likely will continue on even beyond once we come out fully out of COVID. That these small business owners are getting access to enterprise tools because everything is online, everything is SaaS based. So I think those are the three key trends I would point to.
Interesting. Thank you. No, I completely agree, and thank you for that. That brings me to my next question, which, Pat, I would like to direct it to you. In your experience, can you help us understand the role of private-public partnership model and how the financial services industry is playing its part in getting the economies back on track from the current global economic meltdown due to the pandemic?
That's another big question. So I think, the question here is around how do we help society get back on its feet in 2021? It's not just a public sector issue, it's a private sector issue as well. And there isn't one government around the world that isn't thinking about how do we keep people in jobs, clearly, but how do we upskill and reskill our workforce? And so there are a number of things going on in the public sector in terms of education and trying to upskill and reskill individuals, whether that is at the end of the spectrum in terms of age or even those coming out of university, because I dread to think what some of these people are thinking right now. If you're just coming out of school, just coming out of university into the job market, it's non-existent. And so some of the skills and tools that are required are not necessarily taught at universities. If we assume that most universities are a few years behind the curve of what's actually required, then there is a bit of a shortfall there. And so I think we're beginning to see a lot of this happening. We're seeing it happening in Singapore, certainly. We're seeing it happen in the UK as well, and the US. And what's going to be a big reliance is on the private sector to ensure that this training is happening within their organizations, and that these new skills and new things that are required, new tools and techniques that are required, are being kind of mobilized within their organizations. But if you imagine, if every corporate were to maybe mentor a student or someone coming out of university, or even mentor someone that's a bit disenfranchised, having lost their job in 2020, then everyone can contribute a little bit. Everyone's got a role to play in this, because if everyone takes the view that it's not my problem, I'm fine, my household, my family's fine, then we all can't survive. We won't be able to survive. It's as simple as that. For everyone to move forward, everyone needs to contribute a little bit. And so that's kind of one area in terms of skill sets and educations. And I think that's going to become an even more pressing issue as we get into 2021. I think the next piece is around organizations that have been setting up kind of relief funds. And so we've seen quite a few of the big banks and the big organizations do this. In Singapore, we were quite grateful that a company called AMTD Group set up a relief fund, so fintechs could draw down on this. We worked closely with that organization to release some kind of grants as well. So whether it was education sector grants or a variety of different kind of relief measures that could help the fintechs during kind of, I think it was around Q2, Q3. And so that made a massive difference to a number of fintechs that could draw down on this and get some relief, just to help see them through a really sticky patch. And so that's a great example of it. We've seen Standard Chartered do quite a few things as well. And we've also seen kind of fintech pledges. So in the UK, the government's been working closely with the banking sector, and they've come out with a pledge for organizations to at least start to partner a lot more than they used to with fintechs, so they could try and keep these organizations afloat during the tough times. And we're seeing a number of task forces emerge, and I think there's one in particular in Australia that's quite impressive, where they've got this task force together specifically focused on COVID-19, but on the recovery, but also on how to attract businesses to Australia. And so they brought together not the usual suspects, they brought together a variety of different individuals from the public and private sector to come together and really think this through. And so we're beginning to see certain countries take a leapfrog, take a step ahead, and you'll see the rest start to follow in different measures, whether it's pledges, whether it's relief funds with the public and private sector, whether it's education measures, or whether it's kind of these special task force that are coming in made up of the public and private sector to try and think of how do we address that one question of how do we help society get back on its feet in 2021, because if that happens, we all benefit. Yeah.
It's a problem which is to be solved cohesively along with all the different stakeholders from the society, and not just
as individual countries.
Yeah.
Because we're not going to see that. One thing we're all lacking is that cross-border business activity. And so if countries, collections of countries, regions are coming together, hopefully with the news last week in the US, we'll start to see more of a coming together than a falling apart.
Yeah. No, I agree. Thank you, Pat, for that. Coming back to the same SMB discussion that we started, Guillaume, my next question, I would like to come to you for that. So as we know, SMBs, they comprise 98% of enterprises and employ 50% of the task force. And this again, I'm talking about Asia Pacific as a region. So they happen to be the most hard hit by the pandemic, right? So what role do you think SMB banking, or especially digital SMB banking, play in the path to recovery from this pandemic?
Thank you, Sweta, for this question. I'd just like to come back in once again with what Pat has said, which is, sure, I believe, a critical element of the path to recovery is the responsibilities of the private sector towards contributing to the changes in the workforce, the changes in the skills, in the competencies that the future organization will require. It's just a simple and a humble example, but we have, for instance, approached and are working now with the Hong Kong University in Hong Kong with a group of students that have set up a consulting firm to try to bring them on board on some of our projects as interns or observers, to see basically firsthand what are the changes, what is a work from home setup, how organizations are adapting to that change. And I think it's a responsibility that falls into each and every of us to try to adapt the young generations, because we'll definitely see the hardship of winning a job in the coming 1 to 3 years. Sorry, that was a digression, but I think it was a very important point.
I'm glad that was a helpful comment. Yeah.
So to come back to SMEs, so you are right. To complete the statistics, indeed. So in Asia, depending on the economies, it represents 30 to 50% of the GDP. The issues that the SMEs are facing today, and especially after the pandemic, are just amplified, terribly amplified by the pandemic, but we have seen it coming. All the hardship to access to credit, the difficulties in accessing basic banking services, account opening, payments, cross-border payments, those are just being amplified right now because of the crisis that we're living now. Unfortunately, I don't see a path to recovery right now in the signals that I've received from the industry. And that's actually very alarming. We've seen over the past few years extreme competition in the retail banking industry. We've seen investments, huge investments from the private sector. We've seen zillions of initiatives from the central banks and the regulators in order to build an ecosystem for retail customers. But SMEs, small corporates, have always been slightly left apart from all these actions that have been taking out the private sector or the public sector. And we're paying it now. I don't see how the problem will be solved if we don't understand the root causes, or at least if we don't tackle the root causes. So credit worthiness. I think Arvind pointed the right difficulties that SMEs are facing right now. I believe the issue is not the technology. We have it right now. It's on the retail side. I have millions of examples, one of it being Credo Lab, which was represented at the last FinTech Festival, that are trying to achieve the same objectives, but with different sets of data, different sources, and thus, targeting more people. The only problem with creditworthiness right now is that it's easy to find alternative data for an individual, but it's extremely hard to assess the creditworthiness for a company. I've participated to many working groups on this pattern, and the only thing right now that can be done for alternative sets of data to assess the creditworthiness of a company could be to imagine that the 5 key people of any SME are representing the company in terms of behavior. All right. So if you take this sort of assumption, then you can derive some sort of credit assessment, which will probably be a little bit more, will give access to more SMEs to funding. But yet, we're very far from implementing that. So I believe tackling the fundamentals of creditworthiness for SMEs, this will be probably one of the first key aspects to look at for digital banks. The second part, and why today we see a lot of marketing and licensing retail banks, but very little things being done from a SME banking perspective, is that it requires another type of infrastructure. It requires different access to data. The simple onboarding process and compliance check from a KYC perspective, for instance, is very much complicated. Of course, for a traditional bank, it's worth it if you onboard an MNC with several subsidiaries everywhere in the world. But if you onboard a small company that will bring a lot of fees, then the cost of onboarding these people is probably not worth it, right? So we need to solve this. There's a second aspect that can be solved probably with the same type of initiative, access to simple banking products, all right? I was discussing with one of the company we have worked with. It's a neobank in Hong Kong called Tetris. They're focusing on SMEs. The starting point of them starting the business is that some SMEs, profitable SMEs, were willing to pay $25 to effect a payment, to just have the possibility to have an account and effect payments. All right, $25 per transaction. It's huge. It's just that in a normal bank, they just can't. If you look at today, the pile, I won't give any names, otherwise I won't make friends here, but if you look in some traditional banks here in Hong Kong, the pile of files, okay, of SMEs waiting 3 to 6 months to open an account, it's incredible. Access to data, simplification of the identity, documentation, and creditworthiness. And on the other end, the access to, I would say, globalized services, okay, which are catered for those banks. This is all linked with the setup of the correct infrastructure, all right? Initiatives and those initiatives, I believe, should be highly sponsored by the central banks and regulators. I believe MAS is working today on a lot of initiatives on that front. We have heard last week, and we worked with the Hong Kong MA on the creation of a CDI, so a digital exchange, a data exchange, interchange, in order to have simple use cases of data from individuals and corporates to be exchanged in the same infrastructure. If we have this, we will enable small companies to have access, to be able to plug themselves, provide their use cases on this infrastructure that will be supported by a whole community. So until we have that, I won't see how SMEs could live a better life.
Yeah, that's unfortunate, but yeah, let's see. We are hoping hope to see the recovery a little more faster than what we are expecting.
Indeed.
So that brings me to my last question. I think unfortunately Sudhir has dropped out. Jagruti, Sumit, are we getting Sudhir back? Otherwise, we'll move to my last question. So meanwhile, I'll just shoot my last question, and this is to all three of you. Jagruti is here. Is Sudhir joining? No? Okay, you're on mute, but I think you said no.
Sorry. Yeah, he won't join.
Okay, sure. No problem. So that brings me to my last question. So while banks and fintech collaboration has received significant push over the years, and this includes regulators as well, where they have been pushing a lot towards this collaboration, but we have seen very few instances of mutual success. And this again is a question directed to all three of you. How should the approach from either side alter to facilitate such collaborations in future?
Sure. I'm happy to go first, unless Guillaume,
Sure.
you want to?
Please, Pat, go ahead.
So I think I think in various parts of the world it's more advanced. I think the fintech to bank collaboration piece, it's gone through its denial phase, and then it's gone to acceptance, and then you started to see some of it. But it's still a long way from where it needs to be. I think there are initiatives now that are trying to bring banks and fintechs together, and there's one that MAS worked on with the World Bank's IFC, as well as AMTD Group and MasterCard as well, called APIX. And so this is essentially an innovation kind of sandbox in the cloud. And what it does is it enables banks and fintechs to connect in a seamless way. So the fintechs would release their APIs on this platform, and the banks can then test these APIs. What the bank can also do, or any corporate really, is pick out the best in class from a particular type of value proposition that they're looking for. They can test as many of those APIs as they want quite seamlessly within 24 hours or a few days if they wanted to. And then they can decide which ones they want to partner with. I think these types of initiatives help move the dialogue and the question onwards. But I think what's got to be the big imperative is corporates and the way that they partner, the internal processes. So if it's the compliance teams, if it's the legal teams, if it's the product division teams, how do you get a process internally that gets buy-in from the top? And how can you even pay for some of these proof of concepts? Because that's always a contentious area, because a lot of fintechs can struggle massively by waiting to get for a project to go live. And so I think there are certain elements that are broken, but I think we're beginning to see movement and things such as APIX, and I know there's others, similar types of initiatives around the world, will really start to help move the conversation on and hopefully accelerate this, because the proof of concept can take a year, maybe 2 years, if at all. And so that process has to be condensed so then these partnerships can start.
Yeah, I mean, I think I would actually challenge the notions with, I think fintechs and banks have actually been much more open to partnership in our geography than anywhere else in the world. And if you look at the reason for that, I think previously the fintech were seen anti-bank and anti-FIs. I think if you look at what's happened in the last 5 to 6 years, actually, more and more fintechs are naturally partnering with banks, and banks are seeing it as a way for distribution of their products and services, or it could be a customer services layer or customer experience layer where they could be using leveraging fintechs. I think the key part is figuring out your value prop. When you go to the bank, of course, you have to respect that the banks have a lot of compliance burden, and there are a lot of policies, risk management they have to comply with that the fintechs don't. So fintechs who can understand as they think about their partners and the realities in which their partners operate. And then the banks in turn understand and appreciate the flexibility that they have with these fintechs versus their internal IT teams. It's a win-win. And I think most of the time what we spend in as a network is really trying to figure out this value prop, right? Because a lot of times these fintechs want to be, banks want us to credentialize some of these fintechs that, yeah, they're good enough, or what we call as visa ready, that we can pull them into our network. From compliance example that we were talking about, like, are they, can we actually safely onboard them and then help them upsell their services to the banks? And so I think it's a partnership, is a two-way street. But I can tell you that in our geography, when we look at markets across the world and Visa also, there's much more positive momentum with fintechs in Asia than in other parts of the world.
Yeah, no, I agree. I agree to that. Guillaume, your thought?
So I agree basically with what my peers have said earlier. I think that the early days defiance between the banks and the fintechs, this is slowly going. In many instances, I think we have all worked in situation where you have a very smart and dynamic entrepreneur who is trying to push his product in front of bankers not really understanding the way that works. In that case, I think we're also, it's very good to remind, as Arvind did, that banks are basically have one mission, is to keep people's deposits safe. And at one point when all these processes take time, there's also, we need to respect some of the processes, although we need to improve the speed and the access and the provision of the platforms and the ecosystem to fintechs to develop the products. I think this defiance is gone now. Banks have developed not only sandboxes, but also very much seeding programs and work a lot with the fintech communities. For me, the issue that we are still facing is a lack of long-term strategy in fintech investing. The epitome of it being SoftBank, as well all seen, but there's basically a need before entering a collaboration model to be clear on the hows and abouts of this how this partnership will work, and the exit. There's always an exit plan missing into all the partnerships I've worked with. It's something that we don't talk about. We talk about proof of concept and free if possible. We talk about a lot of things, and a lot of roadmaps of number of clients and KPIs, etc. But we never speak about a proper exit plan. What if, we decide to part ways, or what if we decide to change the plan at one point? So it's very important to secure that plan to start with. For me, that's the key of the new collaborations that we need to see.
Thank you, Guillaume. I've got enough reminders on my phone, as well as Jagruti on the screen is here to remind us that our time is way up than what we were given. So thank you to my panelists. Let's open up for questions. Jagruti, can we take questions? Okay, I don't see any question here in the question box.
Anyone who wants to put up a question can either raise their hands or put it on the question tab. There's one.
We have some there.
Okay.
Hi there, this is Kiran Trikuda from Moderator Group. We are a VC company from Singapore, but we are extending our arms in the Asia Pacific. We recently invested in a couple of digital banks, starting from Australia, and we are even looking to invest in some of the Singapore and Malaysian fintech companies. One of them is IOU, is like a afterpay company, buy now and pay later. So this is another fintech company where we invested. So and because of the pandemic, most of the customers are now forced to use the mobile, and this is helping a lot of traffic. So my question to the panel is, yeah, we had a pandemic, and it enabled people to go mobile, but um, are there enough opportunities for the banks and the fintechs to really handshake? Because banks are more centralized and fintechs are more, driving towards the decentralization. How do you see this?
Anyone? Pat, Guillaume, Arvind?
So sorry if I got the question right. Are there opportunities for the banks and fintechs to partner? I couldn't
Yes.
hear that part.
Yep. So, that's my question. So,
Yeah,
yep. Go ahead. Yeah.
Yeah, no, I would say it's happening already. I mean, like I see when I talk to the bank heads, especially on the card side, there are a lot of partnerships already underway. So some of the use cases that I've seen really take off, where fintechs are rightly positioned, are like distribution of loans, distribution of lending, right? So lending on prepaid is an emerging use case. There are fintechs which are partnering with banks for their corporate customers for management solutions. That's taken off very well. Buy now, pay later. That's an example that you just shared with us. I think there too, the underwriting of those customers, mostly it's on the balance sheet of the bank. And all fintechs are doing is really provisioning that credit at a point of purchase, online or offline. So I think I see there are two areas where fintechs can really add value. And to be honest, I think good fintechs are already adding value. One is the distribution. How do you get distribution of banking services channels at scale wherever the customer is? And big techs like Google, PhonePe, Paytm, I think these guys have done much better job at scale. But so are fintechs too. And then the second is the credit. Banks definitely want to partner with more and more partners who can help them underwrite and do better decisioning, credit decisioning for underwriting new to credit customers. That's a huge opportunity in India with a massive untapped credit base. And then I would say, fintechs who are smart should partner on some of these ecosystems that the regulator is creating, right? So regulator has opened up regulatory sandbox with a bunch of use cases. Banks are looking at those use cases. So if you're a fintech, participate in those use cases, participate in Sahmati and account aggregator framework, which has taken off because banks are partnering by design. I mean, like they have to partner in these constructs because of the regulatory mandates. So I hope these just give you some examples, and happy to talk offline. But there's a lot of good momentum on this.
Sure. Thanks very much, Pat. Any comments from you, Pat?
Sure. So just to add to that, I think the back end and infrastructure, I think, is something where we're seeing movement. So the B2B space and trying to help corporates or banks, not just the large ones. I think that's the bit we all look at, but it has to be some of the smaller organizations, and we're seeing that across Southeast Asia. But I think, and I can't. This is where I slightly disagree with Arvind a little bit here. That I still think it's a long way to go. It's very early days. If you think, I think Arvind, you mentioned 5-6 years ago that this was happening. 5-6 years ago, the term fintech was just getting mainstream. And so that was the beginning of the denial phase. And then we've moved into different phases. And I think there's still a long way to go. It's just the tip of the iceberg. We're beginning to see movement, yes. But are we even close to kind of getting to where it should be? The answer would be absolutely not. I think there's lots more opportunities. I think as banks become a bit more comfortable in how they partner with fintechs internally, how they bring them on board, the value proposition, as Arvind mentioned as well, I think that becomes a bit better. But I think it's trying to get that new breed of bankers where you can see value in partnerships with some of the smaller organizations. And I think a lot of organizations or banks are quite quick to go to the big corporates or the big kind of software houses for their solutions, or the established giants where you may not necessarily get the state of the art propositions or unique value propositions that can get to where you want to be, basically, in the flexibility. So I still think there's somewhere to go. I think, as I mentioned, the Apix platform is one thing worth having a look at, because I think there's a lot of opportunities there for banks and fintechs to collaborate.
Beautiful. Thanks very much. Thank you very much.
Thank you. Thank you, Kiran.
Thank you, Sweta. Thanks for giving an opportunity.